Welcome back, investors. Weekly news roundup. So let's start first with the markets. Markets suffered a choppy week, obviously linked to the geopolitical situation between the US and Iran, with the fact that President Trump has been resuming the attacks on Iran. So you see here SP 500, Nasdaq and Dow Jones had a slight decline compared to the previous week. Of course, on this channel, we'll be speaking about top 100 companies in the world, top 100 brands, because that's my investment universe. Let's start with Oracle. I do not have Oracle in my portfolio, but what was interesting with Oracle is that one of the credit agencies, Standard & Poor's, has been downgrading the credit rating of Oracle. So this is clearly linked to the solvency. So they have doubts about the solvency of the company. So the company Oracle is still investment grade, but they are not far away of being considered junk grade in terms of investment level. So the main concern for the credit agency, and I could say in general when we are in the AI conversation, is that OpenAI accounts for half of Oracle's order backlog. So they are very concentrated depending on one single customer, being OpenAI. And so the shares, of course, they have been hitting a 52-week low close to $131 a share. Next company, Richemont. I had Richemont in the past as a luxury brand. So those who follow me, you know that I like to invest into luxury companies. I currently have LVMH and Kering in my portfolio already for 2-3 years, rough cut. Had Richemont, had sold them for a nice profit. So Richemont, which is always one of the luxury companies that reports profits before LVMH and Kering. I think LVMH and Kering are foreseen for the last week of July, if I'm not mistaken. So the luxury results of Richemont were actually pretty good. So they had 20% Q1 sales growth, and of course linked to that, the shares jumped more than 7% after they reported the results. Always a reminder, I put you always the ticker on Vinley. So the ticker for Richemont is CFR.SW because they're listed on the Swiss Stock Exchange. Obviously, the other brands like LVMH, Hermes, and Kering, of course, also grew the share price linked to 7% on Richemont. If I remember well, they were like plus 3% after Richemont had published the earnings, as well as now expectations are high and people are expecting that this is an industry movement and not just a movement isolated at the company Richemont. Another one, interesting one, Netflix. So some of you know that I like as well to invest into companies, but at a smaller scale that follow the Metcalfe's law. So really having winner takes all dominant market position with nice growth ratios and nice profitability ratios as well, and with some somehow passive income and growth being paid at a reasonable price. So Netflix revenues were up 13%, and I think I mentioned this in one of my earlier posts, that management and investors are a little bit worried about the engagement. So they did, by the way, a huge buyback of money, so they have excess money. So the profitability is not bad at $0.80 a share. I think the market, and again, you know me, I'm not the one who likes to speak about estimated or forecasted EPS, but the market, I remember, was expecting $0.79 per share of profits, and they actually beat this benchmark. So a 6 or 3% profitability is okay, but you see on the graph on the right hand side that the market is punishing currently Netflix. So when you look at the top was close to $140 or $135, that the company is now being listed at rough cut below $70. So they lost nearly 50% over the last couple of months, in fact. Just to wrap up, a couple of other interesting, let's say, facts related to these global companies that are typically in my investment universe. Meta, so the owners, or Meta Platforms, the owners of Facebook, WhatsApp, and Instagram. So they are in talks to rent compute power to Anthropic, which means that they have maybe overcapacity. That's also a signal that, at the same time, they're trying to build new data centers, but maybe now they're hitting, capacity issues in the sense that they don't need as much capacity as they have, which is obviously a concern because you're going to have assets in your balance sheet and those assets will not contribute to the profitability of the company. So they are apparently trying to rent out compute power to Anthropic, which needs compute power. Apple, they have been suing OpenAI over alleged trade secret theft. So that's something interesting to see. You remember that OpenAI hasn't IPO'd yet, and this reminds me of OpenAI also as well having been sued by I think it was the New York Times a couple of years ago for breach of intellectual property as well. SpaceX, very interesting. I'll put you the graph here. On SpaceX, you can see, so this is a graph that we have in Vinley. You can see actually that after the IPO, SpaceX is in fact now even below the IPO price. It's shot up at $220 rough cut. I think it was 1-2 days after the IPO, and now you see that the price has come down to 135 or below the $135 of the IPO price. This is, again, for me, it does not surprise me. This is typical for IPOs, where in the beginning the price goes rocket high, and then at a certain time people start just booking in fact, their profits. And the last one, Yum Brands, again, also I've put here each time the Vinley tickers. You can see that investors are worried, and even Yum has been making over the last couple of hours even communications about a cyclosporiasis outbreak related to their lettuce. So shares, of course, and shareholders are not happy, and the market is not happy. So the shares actually have come down as well. With that, hope this Vinley radar is helpful for you. Again, I will be covering the top 100 brands, top 100 companies in the world, because that's my investment universe, and sharing with you my perspective, how I look at those companies. And and if you like this type of format, and in order to support our channel, feel free to follow us and to like. This will of course help us grow as well, and will help us also for the algorithms of the different platforms that we are in. Thank you very much. Talk to you in the next one.